So that tells me crypto still has more downside to go. I think at minimum 12, 13,000 on Bitcoin. I even have a worst case scenario of 3,500, which would mirror the Amazon collapse in the .com era, right? So Amazon dropped 95% from peak to trough in the .com collapse. If you look at like Amazon, what it is today, and ultimately is Bitcoin that type of big entity?
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us about his recent price prediction on gold and Bitcoin. According to Soloway, Bitcoin and stocks crashing lower and gold will go higher. Soloway shares his opinion regarding high inflation rates, the Fed, and that we can possibly see Bitcoin price drop to 12 to 13K. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
You know, one of the things you look for, what we saw Terra Luna collapse in crypto. That was a big event, right? So you saw crypto really seeing some of these, but it didn't go to the extent where people started to totally freak out about their crypto holdings. So that tells me crypto still has more downside to go. I think at minimum 12, 13,000 on Bitcoin. I even have a worst case scenario of 3,500, which would mirror the Amazon collapse in the .com era, right? So Amazon dropped 95% from peak to trough in the .com collapse. If you look at like Amazon, what it is today, and ultimately is Bitcoin that type of big entity, then that may be the foreboding for what we could see there. In the stock market, you still have people that are buying the dip. One of the key notes about when a market finally bottoms, it's when everyone's way too scared to buy the dip, right? So we're definitely not close yet. I think just at bare minimum, we have to revisit the pre-COVID highs. So if you go back to February of 2020 in the stock market, that's probably at bare minimum where we have to go. And I think that's just if we don't go into a recession. So just the tightening that's going on, the Fed tightening monetary policy, stopping stimulus, the government obviously not able to print quite as much as they were during COVID. I think that's where you're going. If we enter a recession, that's where you could start to see us go even lower than those levels. So one of the biggest concerns I have is that we're entering this new phase of the market where long-term investors are really going to struggle. If you look at the long-term investor, they've really been in control since really 2009. I mean, every dip's been bought. We've made new all-time high after new all-time high, and there really hasn't been a scenario where we've had a long bear market. However, I think now you're starting to get into that situation because the Fed is going to be handcuffed from printing us out of the next recession in a meaningful way because the inflation is going to stay too high. So let's take a look at some charts here. I want to bring up some charts, show you guys what I got going on here. This is the Bitcoin chart. You can see we're beautifully bouncing off of the 2017 highs. This is the high going back to 2017. We bounced here, and now we're retesting. Bitcoin may see upside to about 23.5, then I think down to 13 to 12. And then if we go to the spiders here, take a look at the spiders.
Flag right there? Is that
What's that?
Flag? Was that a bear flag on the is there a bear flag on the Bitcoin chart?
Yeah, right here or here.
Yeah, right there.
Yep. So that is the only caveat is I feel like you've had bear flag right here and another one here. And so it's almost too easy to think that the bear flag will work out perfectly. So my guess is everyone's expecting us to break lower in Bitcoin. People are kind of feeling like that right now. So my guess is you'll have a little bit of a short-term move up, get a few more people bullish, and then we'll probably retrace to this channel, right? So this was a beautiful channel that price stayed within. It broke, and oftentimes what happens is you go back and retrace to that level, right? So my guess is there's a decent chance we go right back here, then we see the bigger move to the downside on the charts. So yeah, I mean, this is all weird, right? Because the chart, you're right now it's a little bit more bearish, although it is a rounded bottom a little bit, which is not quite as ideal bear flag as this one was over here. But it's certainly, again, there's no denying that Bitcoin still to me has downside. And I would just counter that with, just for people out there thinking about it, you know, there's been a lot of people that have said, oh, the lows are in at 17.5. How does that make sense when this is the first bear market for Bitcoin where the Fed isn't printing money, right? So really, if anything, this should be the worst bear market of Bitcoin's history because it's the one where the Fed's not quantitative easing, right? So yeah, I mean, that's just some crazy stuff going on here.
It launched in 2008, 2009, and they were bailing out the banks and doing
right.
QE at that time. So they've been doing QE ever since, right?
Yeah, that's right. So yeah, and then you had QE1, QE2, 2.5, then COVID, and then I mean it's been printing and basically down to zero interest rates since that point. This is the first period where really we're seeing that pulling back on monetary policy and tightening. So to me, that tells me that it could be unfortunately worse than past ones. But I do think for Bitcoin's case that wherever it bottoms out, that's going to be an amazing buying opportunity. I don't think Bitcoin's ever going away at this point. I think it's going to be something that we're with us for the long term as the digital gold. And so I'm eagerly awaiting moves down so I can actually accumulate some more Bitcoin. So yeah, just quickly on the S&P chart here, and I'll quickly go over this. Number one, what a move up, and like you said, bear market rally, right? I mean, was that an incredible move up, almost nonstop? But look at where it stopped.
I got short squeeze on that. I got short squeeze on that rally.
That was it, man. I mean, when you got to the highs, what did we see? We saw everyone saying, oh, the bear market's over and all this stuff. And that's a dead indicator that it's now going to reverse. I mean, it's this contrarian psychology that makes good traders and investors. And just thinking about that, as soon as you start to see on Twitter people saying, oh, the bottom's in, new bull market, what did we see? We saw like GameStop, AMC, Bed Bath Beyond, they were all running crazy. And it was like, people were, the Wall Street Bets crowd was trying to relive the heyday of 2021. And it's like, well, dude, it's not quite that same market condition because now the Fed's tightening, right? So people had, they just don't realize that. A lot of them are newer investors. We saw, I mean, the chart on Bed Bath Beyond is just incredible. Like to see this pop and how quickly it deflated. I mean, that's nuts, absolutely nuts. But that's the nature of it. So going back to the spiders, look at the support area here. That's where we bounced. We're still having a nice little bounce today. I think there could be a little bit more upside, but eventually I do think we're heading down to this pre-COVID high over here on the charts. So I think, again, short-lived rally here, not like the last one. This bear market push or bounce could last for a week or two, but not like a month or two like the last one. And then I do think we roll over in late September, October, and into year end.
What was your take from the Jackson Hole meeting, and how's that going to translate into the markets?
Yeah, so that was remarkable how hawkish Jerome Powell was. I mean, his whole speech was 8 minutes and the markets just freaked out, right? I mean, from that point on, we basically saw nonstop downside in the equity markets, the stock market, all the way until this morning's jobs report. And the jobs report was so key because it showed small signs of things weakening just a little bit, but not enough to scare the markets that we're going into a fast recession, right? So it's enough. It was just a little weakening to show that maybe the Fed can start to wind down the hikes, which is what the market wants, but not enough to show a bad recession coming, almost like that Goldilocks, not too hot, not too cold numbers this morning. So right now I have different accounts set up. I have an account just for crypto, account just for stocks. Stocks I'm in and out since I go long and short quite a bit. I'm sometimes full in, then sometimes I'm only 25% in. Right now, crypto-wise, about 33% invested in various cryptos. Basically I was looking for the bounce off that level we talked about, which was the 2017 high. So I picked up a little bit of Chainlink, a little Solana, a little Avalanche, just for a quick bounce here, as I do think they'll bounce up. And we could just take a look at like Solana here, but I think it's bouncing up just a little bit here. Yep, just getting a little bit of an uptick here, maybe a small micro bull flag here. So I think, resistance around 35 is probably the extent of what I'm expecting. But I think for the most part, yeah, I mean, I have definitely in my mind the idea that once we get into the mid to low teens, that's where I really start to buy up more and more Bitcoin. And then I'll leave myself room in case it gets into like below 10,000. But yeah, I mean, definitely proper allocation is important here. When I say load up, I'm not talking about investing all my money, right? It's strictly a percentage of my net worth is allocated towards crypto. And at most I would have that amount in crypto at one time. For me, I picked up a little bit as just short-term swing trades. The only ones for long-term investments I would go near, for me at least, is Ethereum and Bitcoin. And the thought process is just what you said, is that we don't know what's going to replace which technology, which one, So like if you looked at 2 years ago, if you looked at the top 20 cryptos, a lot of those are no longer in the top 20 and they've fallen down. And now you have like Solana, Avalanche, which weren't in the top 20 a couple years ago. So people have to be really careful. I mean, it's okay to take a long shot with a very small amount of money and just roll the dice. But if you're really trying to be an investor, you need to stick with the best of breed in crypto, because I think before the bear market is over, a lot more projects will go bust than what we've seen, even with the Terra Luna and even with Celsius and all these other things. I think a lot more will happen negatively first. The charts were telling us oil was going to roll over. The peak was when Russia invaded, because that was max fear. We didn't know how things were going to behave, how the supply of energy was going to be. Now we clearly see that Russia's still selling its oil. It's just selling it cheaply to China and India and some of these other countries. So I mean, there's really no major reduction in oil. In fact, OPEC, I think, is meeting to possibly talk about cutting output to try to boost price back up. I don't think it'll matter. And the reason I don't think it'll matter is because the global economy is slowing due to central banks hiking rates. And so, you could cut 1 million barrels of oil in production, but if the economy on a global basis starts to use 5 million less, supply demand takes case here, and you're going to see oil come back in. So I still have downside to at least $76 a barrel. And I think that could even be seen going into the midterms, but if not, by end of year.
What's your take on gold and the gold equities?
Yeah, so I continue to be a huge fan of gold, not only because I think gold does have upside to it, and I think the kicker may have started today with the potential of the economic jobs report to signal that the end of rate hikes is at least on the horizon, right? The Fed is still going to raise in September, May 50, 75 basis points. They'll probably raise one more time later this year as well. But I think that the markets after the jobs report was just a little weaker. I think they're saying, oh my goodness, maybe the Fed will be done after that. And that's very, very bullish for gold because it's bearish for the dollar, right? The US dollar has been going up because the Fed keeps tightening monetary supply, pulling dollars out of the market. So the bounce in gold today has been tremendous. In fact, let's take a look here. Interestingly enough, you kind of got to a little bit of a double bottom here. This maybe is a little bit of a W beginning pattern. So we would want to see gold start to track back to like 1900 and then maybe create that V for the next big move up. But I think that, again, with the uncertainty about the economy, with the uncertainty about the Fed, all these things make stocks very, very risky right now. Crypto, very, very risky. We don't even know with regulation, and we didn't touch on that, but regulation at some point is going to come for crypto. And therefore, gold, even if it doesn't outperform and make you 20% in a year, at least you're not going to lose 20% like if you were in the S&P 500, or way more if you were in cryptocurrency. So Newmont Mining, I mean, holy cow, look at this chart on Newmont. I mean, this is by far my favorite. Look at how oversold that is. You had this channel line here, a beautiful channel. You pierced it, and then you touched these pivots right here yesterday. And then look at the bounce today. That stock's up almost 4% on the day. So an awesome move there. And I think, again, as soon as you see an end to the hiking, then the miners, the idea is, all right, so one of the reasons why the miners have underperformed gold. So if you look at like Newmont Mining, I mean, holy cow, down what, 50%? So the miners are underperforming gold, which is maybe down 5% for the year, because they have these inflation costs that are going up, right? So when they mine, they have to pay their guys more, they have their equipment costs more. All of these costs go up for the miners, while gold's price hasn't really been going up to compensate them. So they're getting crushed on costs, meaning they're making less and less money. But if you see inflation stall out and then gold start to go up, now the miners should outperform gold on the upside if that occurs. So I love right now. It's I got gold miners, I got GDX, I got GLD. I'm in gold pretty heavily down here. Only partially, right? So I swing trade gold a lot, but I'm a big believer in the security of having a little physical gold. Like I always say to people, like, you'll sleep better at night knowing if you wake up the next morning and the banks are shut down, the grid is down. Like, you might not even be able to access your Bitcoin if the grid is down, let alone your credit cards aren't going to work, and who knows what's going on if you can get to the bank and get any cash. But if you got gold for thousands and thousands of years, gold has been a store of value and a store of buying things with. So have a little bit on hand. Doesn't have to be a lot, but just the emergency amount. I mean, 8 ounces is perfect, right? Because, I mean, you think about it, if the grid went down, it probably wouldn't be for a long period of time. In addition, if the grid went down, your gold would skyrocket in price, right? Because it's the only form of value. Everyone would be like, yo, I'll give you 10,000 for an ounce, because they can't buy anything else potentially, right? So I think you're fine there. I mean, as your wealth grows, maybe add a little bit in proportion, but for me, really, it's like, right now I hold physical maybe like 1 to 2% of my net worth. Very small amount, but it's enough that I think I can take care of my family in the event of emergency. You might get a little bit of a bounce here early September. We're around this 3-day holiday weekend. Markets are starting to think maybe the Fed is coming to an end of their hiking cycle. I think by late September, October, that might be the case, but then I think we're going to start to see weaker economic data that's going to freak the markets out about maybe the Fed already pushed us into a recession and it could be a bad one. And then the biggest question, which could really be detrimental to the stock market, is how does the Fed get us out of the next recession? Every past recession, they've printed us out. If inflation is still even at 4 to 5%, and we know it's way higher right now, how do they print money with 4 to 5? I mean, what are they going to send it to 15, 20% inflation by doing that? They're not going to do that. And so you could be in this prolonged recession that just really stinks, frankly. So it's going to be a trader's market. Great to get educated, learn how to read charts. It's super helpful in guiding to like entries and exits.